Hello everyone. In this particular recording, we're going to go through some of the homework in Chapter 4. And remember, Chapter 4 is all about job costing. With job costing, this is when we apply costs or assign costs to the manufacturing process where each item that we are making is unique. It's not a batch of items that are exactly the same. In that accounting, we use what's called process costing, which we will study in the next chapter. So as a summary, once again, there are three costs that get attached or are inventoriable to the manufacturing process, and that would be number 1, direct materials, number 2, direct labor, and number 3, manufacturing overhead. And once again, that overhead includes indirect materials and indirect labor, as well as all the other overhead items. So here we have an example. We have a job order number 27, and for this particular job, we are to try to figure out what our total manufacturing costs. And once again, the manufacturing costs are the sum of their direct materials, in this example, $80,000, direct labor of $90,000, and the overhead. You can see that the overhead equals all the indirect materials and labor, as well as the other overhead items. So you can see they total $22,500. Let me do the math there. Make sure that all works. It certainly does. And we've got the total materials and labor. $192,500 is the answer. Really what you need to learn here is the manufacturing costs include direct materials, direct labor, plus all the overhead, the applied overhead. Okay, very similar question. For which of the following industries would job order costing most likely not be appropriate? Key word here is not. Basically anything where when we are assembling items, inventory items that are exactly the same, you would use process costing. So the example here that doesn't fit is the cereal production. Because the cereal boxes are all exactly the same, we would use process costing for cereal production. But everything else, home construction, aircraft assembly, small business printing, each job, each item that we're making, manufacturing, is unique in and of itself. That is when you use job costing. All right, we have an example here. We have a company. They use job order costing. They've assembled the following data, basically, which we see here. We've got direct labor of $33,000, direct materials of $85,000, indirect labor $3,900, utilities $410, fire insurance $510, manufacturing overhead applied $7,000, indirect materials $6,400, and depreciation $800. And basically what we need to do is calculate the manufacturing overhead, whether it is over applied, or I should say over allocated or under allocated. Well, this is how we figure it out. So what we're going to do is first we are going to calculate which overhead items are actually incurred. And from that list over here on the right, the actual overhead items are the indirect materials and indirect labor, the utilities, the fire insurance, and the depreciation. When we add all that up, it comes to $12,020. But that's the actual overhead. But how much did we actually apply to the work in process inventory? And I'm highlighting it over here on the right. We actually applied only $7,000. So if the actual was $12,020, but we only applied $7,000 to the actual Wipp, we under applied $5,020. That under applied would actually have to be adjusted in a journal entry at this moment in time at the end of the year. Okay, but this homework example is making sure you understand how to calculate over or under applied, or over or under allocated, as your textbook calls it. All right, and so basically what we have here is we have another company, Carlton Corporation. The information given to us. Looks like we have direct materials issued to production, indirect materials issued to production, manufacturing overhead incurred, that's the actual, manufacturing overhead applied, that's the amount that's actually being added to the Wipp, and of course we have direct labor of $215,000. So the question is, the company had no beginning or ending work in process, the Wipp inventory. What was the cost of jobs completed and transferred to finished goods in May of the year? So basically what we're going to try to figure out are our cost of goods manufactured. And once again, the cost of goods manufactured is the sum of direct materials, direct labor, and the applied overhead. So the direct materials are 140, the direct labor is 215, and the applied overhead is 225. It shouldn't be the incurred overhead. The applied overhead is what actually gets added to the work in process and goes through the system. So the answer is $580,000. All right, we have a company here, Maynard Company. They use normal costing. Normal job costing, basically what this means is in order to apply overhead to the Wipp inventory during the year, we use a predetermined overhead rate that is based on budgeted actual overhead, not actual overhead itself, budgeted overhead. Okay, so what are we given? The author told us, and I'll put it over here on the far right, that budgeted overhead costs for the year are $3.9 million. Budgeted machine hours are 162,500. That is important to figure out our predetermined overhead rate, meaning how we are going to apply overhead to the Wipp accounts during the year. So if we take our budgeted overhead of $3.9 million, divide it by the budget machine hours, how many hours we're going to use the machines, in this case, 162,500. The result is what we call the predetermined overhead rate. In this example, it's $24 per machine hour. So the next requirement is calculate how much overhead we are going to apply to the Wipp account, knowing that our predetermined rate is 24. Well, what we'll do is we'll take this 24 and we're going to multiply it by actual machine hours. And the author told us over here on the far right, actual machine hours are 156,500. If you multiply that by the predetermined rate of 24, you get 3,756,000. Now, the question is, did we over or under apply? Well, if we applied 3,756,000, but if you come all the way over here to the far right, I am highlighting it now, the actual overhead is 3,740,000, and we applied 3,756,000. We applied too much. We over applied by $16,000, and that $16,000 will have to be adjusted at the end of the year, and we will do so by taking that $16,000 and either adjusting it to cost of goods sold to get rid of the balance in the overhead account, or we will allocate it between Wipp, finished goods, and cost of goods sold. All right, so this next example, we have a company, Richard Company. They produce pipes for concert quality organs. Each job is unique. Therefore, we're going to be using job costing because each job is unique. In April of 16, it completed all its orders. And then in May of 16, it worked on only 2 jobs, job M1 and M2. So let's take a look at what the author gave us. So I'll put it over here in the far right. The author told us that job M1, $77,000 in direct materials, $279,000 in direct labor. Job M2, $52,000 in materials, $201,000 in direct labor. So we are to report the total cost for job M1. And so the we have to read a little bit more. It says here, direct labor is paid at the rate of $30 per hour. Manufacturing overhead are allocated at a rate of $18 per direct labor hour. Only M1 was completed in May. So let's take a look at the example. Let's compute the total job cost for M1. All right, first, as we said, the total labor for M1, as was given to us, was $279,000. That's the total labor. We were also told that our labor rate is $30 an hour. So if I take the $279,000 total labor divided by 30, I know that we have worked 9,300 labor hours. The author is also telling us that our predetermined overhead rate to allocate overhead, and I'm circling it here, is $18 per hour. So if I take 9,300 hours, actual hours worked, times 18, I get 167,400 would be the amount of overhead that I am applying, I'm allocating to the Wipp account. So overall, what's going to the Wipp account? Total direct materials that the author gave us, 77,000. Total direct labor that the author gave us, 279,000. And I am calculating 167,400 of applied overhead. If you add that all up, you get $523,400. Okay, requirement number 2. The author goes on and states that 1,800 pipes were produced for job M1. So how much does each pipe cost us? Well, we just calculated our total cost for M1, our $523,400. If I divide that by 1,800 pipes, I am going to get $291 as the cost for each pipe. All right, now, if the total costs for the job started and completed were $523,400, your journal entry is going to take it out of the Wipp inventory with a credit, and we will debit the finished goods inventory. Remember, there are 3 inventory accounts in a manufacturing process. You have number 1, materials, number 2, Wipp, and number 3, finished goods. This is the step where we are taking the items off of the assembly line and into the finished goods warehouse. Debit finished goods inventory, credit Wipp inventory. And last but certainly not least, number 4, we are required to figure out what is the ending balance in the Wipp account. Now remember, job M1 started and ended in the month. So M1 is done. So the only thing in the Wipp account at the end of the year is going to be job M2. And once again, job M2, what was given to us? $52,000 in direct materials, $201,000 in direct labor, and then of course our allocated overhead is $120,600. That $120,600 is calculated as we have up above. Once again, the labor costs are $201,000 divided by our hourly labor rate of $30 that the author gave us. So we know we've worked 6,700 hours times the rate of overhead allocation of 18. This was given to us. That equals your $120,600. So when you add materials, labor, and applied overhead for job M2, you get $373,600. So hopefully you understand. Once again, in job costing, we have to consider direct materials, direct labor, and the applied overhead to the Wipp account to figure out how we're doing this. All right, next question. We have a company, Haley Corporation. They manufacture custom cabinets for kitchens. They use a normal costing system, which basically means that they are going to be using budgeted overhead and budgeted labor hours or machine hours to figure out the predetermined rate. This is pretty common, and so we are going to figure out what the author gave us. They told us the budgeted overhead when the year started was $1,216,000, and the budgeted labor hours were 38,000 hours. If you do the math, $1,216,000 divided by 38,000, we are given a predetermined overhead rate of $32. And we're going to need that when we try to calculate this particular job. This particular job is called 32 LA Center or La Center Drive. And we know direct materials are $3,800, so that's part of the manufacturing cost. Direct labor is $2,310. How do we figure that out? Well, we worked 110 hours, and the labor rate is 21. If you take 110, multiply it by 21. Let me do that now. 110, multiply it by 21. You get 2,310 is your labor cost. And then, of course, your applied or allocated overhead, 3,520. Once again, remember, we calculated $32 is the predetermined overhead rate. If I take the $32 and multiply it by 110 direct labor hours, that's where you get the 3,520. So the total cost for this particular job is $9,630. Once again, direct materials, direct labor, and applied or allocated overhead. And that's the big deal with job costing. The direct materials and the direct labor is pretty easy. I mean, we're pretty much very simply can trace it to each individual job. The overhead is where we need to come up with an allocation method in order to do so. Okay, in this next homework example, we're going to look at some journal entries. And so the author has given us, let me pull this up. They gave us this big data table that I'll put over here. All right, they gave us a whole bunch of information. Materials used, labor, actual direct labor paid in cash, indirect materials used, supervision and engineering salaries. That is another way of saying indirect labor. Then we have plant utility costs, plant depreciation, actual labor hours, the cost of jobs completed, and then of course the cost of goods sold. So the first journal entry is to prepare the entry for usage of all the materials, both indirect and direct. Okay, well, the way it works is we will credit the materials inventory account for the total amount. In this case, direct materials are $50,000 and indirect materials are $4,000. But the direct materials go to the next inventory account, which is called Wipp. But the indirect materials, you will debit what we're going to call the overhead account. Remember, all indirect materials and labor, as well as all the other overhead, are going to go to the overhead account. The overhead account is temporary. All right, next. How about the labor incurred? We are talking specifically about the direct labor, which in this case is $53,000. We will debit the Wipp for the direct labor and credit the cash because obviously it's payday. It's like paying the payroll. All right, how about the journal entry for all the other overhead items? The other overhead items total $73,000. So how do I get the $73,000? Let's take a look. We've got, let me see, we already accounted for the indirect materials. So the $73,000 is going to be the sum of the supervision and engineering salaries. That's indirect labor, $52,000, plus the plant utilities are $7,000. So we'll add that in here. Plus the depreciation is $14,000. When we add all those three numbers up, we get $73,000. So that is your debit to overhead. Now, we didn't spend all of that in cash. We spent $59,000 of it in cash, which is the sum of the supervision and engineering salaries, as well as the plant utilities. That's the $59,000. The $14,000, we're going to credit accumulated depreciation. All right, next, how about allocating the overhead to the Wipp account? And so we're seeing that we're going to do it $77,000. How do we get $77,000? Well, once again, we're going to come up with our allocated, we're going to come up with our allocation rate. And we're going to base our allocation rate on, the budgeted materials here, which, let me see, the budgeted materials. So the budgeted materials the author gave us, we told budgeted overhead was $1,085,000. And if we divide it by budgeted direct labor hours of 31,000 hours, you get a predetermined overhead rate of $35. So we are going to allocate Wipp, or work in process, for the overhead of $35 per direct labor hour. How many actual direct labor hours did we work? And I'm highlighting it here. The author told us 2,200 direct labor hours. If you multiply that 2,200 by 35, which is the 1,085,000 divided by 31,000, you get $77,000. So that is the amount of overhead that we are going to apply to the Wipp inventory account. We will take it out of the overhead with a credit. Remember, the overhead account has two sides. The debit side is the actuals. The credit side is what we're applying to the Wipp process. And the next journal entries is after the process is done and we are done manufacturing our inventory. We have to transfer monies out of the Wipp account and into the finished goods account. And the author told us that amount, I'm highlighting it over here on the right side, it was $150,000. And so we will debit the finished goods and credit the Wipp account. And then lastly, it will come out of the finished goods account once we sell it to customers. And that amount is $145,000. This is a journal entry that you should be near and dear from your Principles 1 class, where we debit the cost of goods sold, which is just the expense for the inventory, and then we credit the finished goods inventory. All right, so this is a great homework problem, goes through the various journal entries, moving the inventory amounts from raw materials into the Wipp, into the work in process, the direct labor into the work in process, the calculation of the actual overhead, and then ultimately applying the overhead to the Wipp process using a predetermined overhead rate. This is all very important when it comes to job costing. And the last two, this one we kind of went through already, but here we basically are trying to figure out how much of our overhead is under or over applied. And so basically all we got to do is figure out what our actual overhead is. And from the author, they gave us indirect materials and indirect labor, as well as utilities, fire insurance, and depreciation. If you add that all up, that's your actual overhead. But the author also told us that we only applied $10,000. So we underapplied $1,760, under allocated, for the difference between what we applied to the Wipp account versus actual overhead incurred. And last but not least, how much of the job cost, manufacturing cost, was transferred to finished goods for the year. And we can see, once again, manufacturing cost are the direct materials, direct labor, and the applied overhead. So the answer is $661,000. Let me pull up the information that was given to us, and we can figure out how to get the $661,000. Well, the first piece is the direct materials. The author gave that number to us. The second piece is the direct labor, $218,000. The author gave that to us. And the third piece is applied overhead. The author's trying to trick you here because the author gave you a whole bunch of information. They gave you incurred overhead and applied overhead. Well, remember, what gets added to the Wipp account is what's applied. The incurred is the actual. All right, so once again, the actual is not what gets added to the Wipp process. It's only what's applied. And so when we add the three up, $661,000. So these are some 10 good examples, and hopefully you understand job costing. Once again, this is for unique inventory items. Each and every one of them that we make is unique, and they're direct materials easily assigned to each job. Direct labor, once again, very easily traceable to each job. It's the overhead, where we need to come up with a predetermined overhead rate with some sort of common sense allocation method in order to get that applied to the Wipp account.